And the US Central Bank has hiked interest rates for the seventh time this year. It has warned of more such hikes in future as well. It is to rein in the rapid pace of price increases in the country. US Federal Reserve raised interest rates by half a percentage point. It has further projected at least an additional 0.75% of increases in borrowing costs by end of next year. US Central Bank's projection of target federal funds rate rising to 5.1% in 23 is slightly higher than investors expected heading into this week's two-day policy meeting.
Today, the FOMC raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet.
And Fed's policy rate, which began the year at near zero level, is now in target range of 4.25% to 4.5%. It is highest since late 2007. Fed Chair Jerome Powell said it is too soon to talk about US Central Bank's cutting interest rates. He said more evidence was needed to show that inflation is cooling.
The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.
And the US stocks also turned negative following release of policy statement. Fed's policymakers have now predicted slower growth and higher unemployment next year. Unemployment rate is expected to jump to 4.6% from 3.7% by end of next year, further marking a significant increase in joblessness and a possible recession in America.
I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable.
And for more on this, our correspondent Suzanne Tehrani gets us the latest from New York.
This was the Federal Reserve's smallest increase since May, as signs emerge that perhaps inflation is cooling down. However, officials made clear that they do expect to continue their fight against high prices well into next year. Also, Fed experts said that unemployment rates are expected to rise by 4.6% by the end of next year. This is a bigger increase than previously anticipated. And for unemployment to stay high, also, they noted in the year 2024 and 2025, a clear sign that that soft landing that many had hoped for perhaps will not be realized, as talks of a recession also loom. Susan Tehrani reporting from New York for WION World is One.
WION now available in your country. Download the app and get all the news on the move.